If you had to choose between real estate and the stock market, which one actually builds real wealth faster? Stay with me until the end of this video, because the answer might completely change how you think about investing your money. Welcome to Emerald Wealth, the channel where we focus on real financial growth and smart money decisions. If you are new here, hit that subscribe button right now so you never miss a video that could move your financial life forward. Today, we are breaking down two of the most powerful wealth-building tools available to anyone serious about their financial future. Real estate versus the stock market. We are going to look at what each one actually is, the real advantages of both, the risks most people overlook, and which one might genuinely be the better fit for where you are right now. Before we dive in, drop a comment below and tell me which one you are currently more interested in. Real estate or stocks? I want to see where this community stands. Let us start with real estate. Real estate is simply investing in property. Land, houses, apartment buildings, or commercial spaces. And when you invest in property, you make money in two main ways. The first is rental income, which is money paid to you regularly by tenants who use your property. The second is appreciation, which means the value of the property itself grows over time, so when you eventually sell it, you walk away with more than you paid. Real estate is widely considered one of the most stable long-term investments available. It is physical. It is tangible. You can see it, touch it, and in many ways control what happens to it. And historically, property values have trended upward over long periods of time, making it a reliable foundation for building lasting wealth. That is the power of real estate. Now let us talk about the stock market. The stock market is where you buy shares, meaning small pieces of ownership, in publicly listed companies. When those companies grow and become more valuable, your shares grow in value too. You can earn money in two main ways here as well. The first is through price appreciation, meaning you buy a share at one price and sell it later at a higher price. The second is through dividends, which are regular payments some companies make to their shareholders from their profits. Compared to real estate, the stock market is faster to enter, much more flexible, and gives you access to growth happening across entire industries and economies all at once. But it is also more volatile, meaning prices can move up and down significantly and sometimes very quickly. That combination of opportunity and volatility is what makes the stock market both exciting and challenging for many investors. So what are the real advantages of real estate? Real estate gives you steady, predictable income from rent that lands in your account every single month regardless of what the broader market is doing. It gives you long-term value growth as the property appreciates over years and decades. And it gives you a level of control over your investment that no other asset class truly matches. You decide the property. You decide the tenants. You decide when to sell. However, real estate also comes with real requirements. It typically needs a significant amount of money to get started. It requires ongoing maintenance and management. And it demands consistent time and attention, especially if you are managing tenants directly. Real estate rewards patience and hands-on involvement. And what about the advantages of the stock market? The stock market gives you accessibility that real estate simply cannot match. You can start investing in stocks with a very small amount of money and begin building a portfolio immediately without needing a large upfront sum. It gives you liquidity, meaning if you need your money, you can sell your shares and access your funds quickly, often within days. And it gives you the potential for faster growth, particularly if you invest in high-performing companies or diversified index funds over time. The challenge with stocks is that prices can rise and fall quickly based on market conditions, economic news, and investor sentiment. It requires financial knowledge, emotional discipline, and the patience to stay invested even when things feel uncertain. Reacting emotionally to market movement is one of the most common and costly mistakes stock market investors make. So which one is actually better? Here is the honest answer. It depends entirely on your personal situation, your financial goals, your starting capital, and the amount of time and involvement you are willing to commit. If you want stability, predictable income, and a long-term asset you can physically see and control, real estate is an incredibly strong choice. If you want flexibility, a lower entry point, and the ability to grow your money across a wide range of companies and industries, the stock market is genuinely powerful. But here is what the smartest financial thinkers actually do, and this is what I want you to take away from this video today. They do not choose one over the other. The wealthiest and most financially secure people use both. They use the stock market to grow their money at a faster pace and build wealth more dynamically. And they use real estate to create stable, long-term income and protect and anchor the wealth they have already built. That combination, growth through stocks and security through property, is how real financial balance is created. Not by picking a side, but by understanding both well enough to use them together strategically. If this video helped you see these two investment options more clearly, share it with someone in your life who is trying to figure out where to put their money. And if you are serious about growing your finances the smart way, subscribe to Emerald Wealth right now. Because here we build wealth step by step the real way. I will see you in the next one.